Prop Chat. Ultimate insights of trading with Sabio.
Hey everybody, and welcome back to Prop Chat, the podcast where we sit down with traders and talk about what really happens in the markets. So today's guest is Jochen from Germany. He's an engineer, but he's been in the markets since the mid-90s, through the dot-com boom, the crashes, and everything in between. So we're going to dig into one of his favorite topics, volatility, how to handle it, and how to turn it into opportunity. Hello, sir. First of all, I'd like to thank you for accepting our invitation and becoming a guest on our podcast. It's so great to have you here.
Hi, Victor. It's great to be here. Thanks for inviting me.
Great, thanks. So let's start with a fun little game. So imagine that each market has its own personality when it comes to volatility. How would you describe that personality? I don't know, for example, gold is an old wise man, mostly calm, but when shaken, his reactions are strong and memorable, something like that. So if you're ready, we can start.
Mm-hmm.
All right, so the first market is tech stocks.
Tech stocks are like brilliant teenagers, full of potential, but moody and impulsive. They often soar on the promise of innovation, but even solid earnings can trigger a sell-off when investor expectations run too high.
Mm-hmm. All right. What about oil?
Mm-hmm. Oil is the drama queen of commodities, unpredictable, emotional, and always tied up in global politics. One moment it's calm, and the next it's throwing tantrums over OPEC meetings or geopolitical tensions.
Mm-hmm. That's fair. All right. What about, let's say, Russell 2000?
The Russell 2000 is the unexpected player. Small, fast, and full of surprises. He doesn't always play the rules, but when he moves, you feel it.
Mm-hmm. Another one, Euro US dollar pair.
The Euro US dollar is a big ocean tanker, slow to turn, but powerful once it moves. It reacts to deep currents like central bank policy and global trade. You won't see sudden swings, but when it shifts direction, it takes time to stop.
Yeah, I see that. What about Bitcoin?
Bitcoin is like a rocket aiming straight up to the moon. But the moon is 380,000 kilometers away. And sometimes Bitcoin price moves like it's trying to cover that distance in one go.
All right. And the final one, sir. DAX 40.
As a German trader, I've followed the DAX for years. It's like watching an old friend handle pressure. You learn his habits, but he still surprises you sometimes.
All right. So that was great, sir. Thank you. Now let's move on to the main part, to the main interview. So your trading journey began back in 1996, and that's quite a history. So would you please tell us, how did you first get started?
Well, it began in 1996 with the IPO of Deutsche Telekom. I still remember the price. It was 28.5 Deutsche Mark. At that time, I was a student and curious about investing. And like many in Germany, that was my first real step into the stock market.
Mm-hmm. But how does trading today compare to trading 30 years ago? And is there anything from those days that you actually miss?
Trading today is completely different world. Back in the 90s, everything was slower. You placed orders by phone, waited for confirmations, and you got your charts from newspapers. Today, with real-time data and mobile apps, it's faster and more accessible, but also more emotional. The tools are better, no doubt, but the mindset back then was more deliberate.
Mm-hmm. So, as far as I know, sir, you've had a career in electronics and precision measurements. So how does that engineering mindset, where accuracy is actually everything, how does it translate into the way that you approach trading, which is full of uncertainty?
I'm still in that field, and it definitely shapes how I think. Engineering is precise. You measure, you calibrate, and expect repeatable results. Trading, on the other hand, is full of uncertainty. You can set rules, but sticking to them when emotion rises is tough. And I think I enjoy that contrast, stepping into a world that's less predictable. It's a longer process, and over time, you don't just learn about the markets, you learn a lot about yourself.
I'm sure that you've tried many different assets and investment models, but if you could go back in time, what advice would you give your younger self? Maybe stay away from this or focus more on that.
I tell myself to be more aware. I used to follow stock experts who claimed they had calls with CEOs. It sounded impressive, but it was mostly noise. So you can't trade on someone else's mindset. You need your own process. That's the lesson for me.
Hey, you don't have to collect scars to learn trading the hard way. When you join Sabio, you get free access to our Trading Academy. There you'll find courses built by real prop traders. And if you ever hit a question that courses don't cover, no problem. We've got personal mentors who guide you one-on-one. So learn smarter, not harder, with Sabio. So you, sir, have been through some hard hits, the dot-com crash, some bad investments, and a lot of traders would have walked away, but not you, obviously. So how did you learn to handle failure without taking it too personally?
Basically, staying in the markets comes down to your own interest in finance. Either you have it or you don't. For me, that interest has always been there. And what makes this field so fascinating is how broad it is. You can dive deep into company fundamentals like Warren Buffett does, analyzing reports and balance sheets, or you can explore completely different assets like trading strategies, technical setups, or even behavioral finance. And over time, my focus has shifted. Sometimes I'm drawn to one topic, then I discover something new and dive into that. It keeps the field fresh and it changes how you approach it.
A bit of a personal question, sir, if I may. What's this one psychological scar from your bad experiences that still influences how you trade today?
Well, one psychological scar that stuck with me is learning not to rely too much on your bank advisor, for example. Back then, I thought they had some deeper insight, but honestly, they often knew as little as I did. They'd recommend products, give confident advice, but it wasn't based on a real edge. That experience taught me to take ownership of my decisions. In trading, you have to build your own understanding. Relying on someone else's confidence can be costly, especially when they're not the ones taking the risk.
As we already mentioned, you've got this super technical background, yet you've made volatility, which is basically uncertainty, your main focus. So why volatility and not something steadier like, I don't know, fundamentals or long-term investing maybe?
Volatility is essential for trading. Without it, there's no movement, no opportunity. That's why I focus on it. In investing, you can look back and see that the best times to accumulate positions were often during peak fear, when everything felt like it was falling apart. But in those moments, it's incredibly hard to act emotionally. It feels like the world is ending. And trading is different. If you have the skills to identify phases of volatility and position yourself for the next possible trend, it can be a real advantage. It's about timing, structure, and being ready when the market shifts.
I believe that volatility actually means more chances, but also more risk. So how do you tell when it's worth taking and when it's just trouble? What are your red flags?
Volatility does mean more chances, but also more risk. So for me, I want to see movement first. I look how the correction has formed. If it's more wobbly, more overlapping, that can actually be a sign of strength. It shows the market is digesting the move rather than rejecting it. That kind of structure gives me more confidence. And as for red flags, you can never be certain your idea will work. That's just part of trading. So I always look for an entry where my stop doesn't expose me to heavy risk. If the setup doesn't allow for that, I pass. It's not just about being right, it's about being positioned so that if you are wrong, it doesn't hurt you too much.
In your opinion, sir, what makes an asset worth watching for its volatility? Is it fundamentals? Is it liquidity? Or is it the character of its price action?
If you're satisfied with the structure of price movement and your stop distance doesn't expose you to heavy risk, then it's something you can give a try. It's about finding that balance between opportunity and control. If you're working with price action, you want to see someone buying after you. That's the essence of momentum, not just the entering, but being part of a move that continues.
All right. If volatility is energy in the market, where do you see that energy building up right now? I mean, what excites you right now?
Take gold, for example. It went through a roughly 6 months correction, but what stood out was its defensive character. It didn't collapse, it held its ground, and that made it worth watching. Then, during a speech by the Fed, we saw momentum again. And that kind of reaction tells you the asset is alive and responsive. I'm also watching Bitcoin. It's coming out of a smaller correction and could be part of a bigger trend. And the Russell 2000, which reacts strongly to interest rate signals. Well, when the Fed speaks, I tend to listen because that's where energy builds before the move.
Let's be honest, sir. I could just ask you a million more questions about volatility, but maybe it's better to see it on the charts. Could you maybe walk us through a few of your recent trades? I think our audience would really appreciate that.
Sure. I'll give you a couple of recent examples. So in late February, I found a good entry in the euro US dollar. It was coming out of a correction and the structure looked solid. And just a few days ago, I had this trade in gold. Technically, it could have gone further down, but the price action didn't confirm that path. It held up and that shift caught my attention. Basically, as a trader, you're often acting alone. So I make it a point to check out webinars or pick up ideas from others, especially when it comes to stocks. Sometimes a fresh idea can excite you, spark a new perspective, or help you to see something you might have missed.
You know, in my observation, many beginners either panic when the markets get volatile or they just trade too much. What's your number one tip for finding balance in those moments?
I felt that pressure, thinking it's time to show progress after a few weeks of trading, but forcing rarely works. So my tip is to review your trades, step back, and come back with clarity. That pause can be more powerful than any setup.
Mm. As we all know, you have a very technical background, but I want to ask you about intuition. You know, I see intuition as knowledge and experience that have sunk into the unconscious and guide our decisions automatically. So, how would you describe the role of intuition in your decision making today?
Intuition is good, but only if it's backed up by what the market is actually showing. For me, intuition plays a role when I spend enough time with a market to understand its rhythm. That's why it's important to choose a market that fits you, where the patterns align with how your intuition works. If the structure and price action support your gut feeling, then you can go for it. And as for a counter example, I had a positive intuition about oil, but it turned out to be so glowy, so sluggish that the market didn't support the idea. So the lesson is intuition needs confirmation. Otherwise, it's just merely a feeling.
Yeah, absolutely. So, and the final question is here, sir. So, for someone watching who struggles with volatility, what's the one habit they can start tomorrow that would make the biggest difference?
If I had to name one habit that could make the biggest difference for someone struggling with volatility, it would be radical acceptance. That means embracing two fundamental truths. First, the market is random. On any given trade, anything can happen. You can do everything right and still take a loss. And that's not failure, it's just probability. Second, you have zero control over the outcome. You control your process, your entry, your stop, your position size, but not what the market does next. So once you truly accept that, the pressure to be right disappears. You stop forcing trades and your mindset shifts from prediction to probability.
Seems like that's it, sir. So I'd like to thank you for your time and for your wisdom. And I really hope this conversation was as thought-provoking for our viewers as it was for me. So we're wishing you the best of success on your journey with Sabio, sir. Thank you and goodbye.
Thanks for having me. It was a real pleasure.
Great,
Goodbye.
thank you. Have a nice evening, sir. Goodbye.
Prop Chat. Ultimate insights of trading with Sabio.
And to everyone watching us, if you enjoyed this conversation, don't forget to like, subscribe, and share it with a fellow trader. And by the way, it's still a great day for trading. Just think about it. See you very soon.